How is everyone? How are your weekends? How have you been? Are we good? Yeah, good, thanks. Wife's got a horde of her friends over. So we had a nice evening yesterday. Did a big dinner for everyone. It's me and 8 women. It's always quite funny when we rock up to restaurants. Everyone's like, who the fuck is this guy? But yeah, very female household at the moment, which is nice. Very wholesome vibes. But yeah, been tucking myself away, looking at the charts as well. A lot of opportunity, as you guys are well aware. So yeah, been scanning like a madman. Been in and out of positions very quickly, trying to maximize on value, and just playing a rotation game essentially. So yeah, I mean BTC, we can do sort of general and then into alts, right? I'm not going to spend too much time on the general picture because I did it on the YouTube stream. But yeah, BTC looks great, right? This is just a clean flush, as we covered off. Nothing worrying about this at all. Clean tag down here, textbook. Yeah, just continuation, right? And as I went over in stream, if you look at lines, it's still just a bullish uptrend here, right? So yeah, nothing of concern on the BTC front. Still teetering around the 100k mark. Still surreal to say that, but there we go. So yeah, everything looking all right on the BTC side of things. ETH strength, just pure strength at the moment. If we look at the higher time frames on ETH, just want to check where we're at now. Yeah, okay. So the real fun to start soon, in my opinion, once ETH goes into price discovery. Haven't seen this, but this looks pretty valid to me, to be honest. That's a clean line there, gents. Very clean line. 3 touch points, all using higher time frame bodies. Good spacing in between. I feel like there's been some confusion around the whole spacing element on trend lines recently and horizontal levels as well. So ideally you see something like this, right? 2, 3, right? Ideally. But this is still fine in that there's some gap in here, right? If this candle here was here, then I wouldn't call that. That's just one touch point for me essentially. So this is just about okay enough to say that that's a third touch point there. What's going on, V? Max? Okay, cool. So ETH looking nice. As we can see recently as well. So ETH tends to trade cleaner than BTC in uptrends, which is saying something as well. It is saying something because Bitcoin is a clean asset, right? But what you've been seeing on ETH is just these, I mean, easiest plays around, right? Easiest plays around. It doesn't really get much easier than this, okay? So we've been talking about before, when the sweep gets front run and it becomes awkward to position into longs, even though you know in your gut that it's going to move. How do you do it with correct positioning, stop loss placement, etc., etc. Recently, it's been fucking easy, right? This is piss easy stuff, right? You're getting your triggers. We're getting the sweep triggers. Like for me, there's no reason at all why any of you guys shouldn't be max long from this point here. And that's not to say something like I want you to sort of beat yourself up about it. If you're not, that's okay. But just, you know, note for the future. You may be looking at something like this, right? Occurring and just going, oh no, it's just too easy. This just looks way too easy. But ultimately, that's exactly what it is, right? It is fucking easy. The reason it is easy and it plays out is because the context is allowing for that, right? To anybody new in the group or not particularly familiar with my content, I think one of the sort of mantras and aphorisms that I try and hit home as much as possible is that context is everything. And that the first thing you have to sort of assess as a trader is the conditions that you're in, and then you sort of operate a system based on the conditions, right? So whether you're trending, whether you're directional, but not just in a sort of binary manner, right? So not just like one system for trending, one system for ranging, although it's very good to see that. And Paradise, I saw you mention that in the group earlier, which was immediately a thumbs up from me, because that's very good to have, right? That distinction. But we have to treat it on a more granular scale than that, right? So as the trend goes up, we need less confluence, basically, right? The more trending it is, the less confluence we need, okay, essentially. And the reason I say try not to keep it binary in a sort of black and white, either or the other sort of manner, is because we need to know, you know, whether we're here, here. It's very much an inverse relationship, right? Which has to be sort of adapted and calculated on a very granular basis, day by day basis, that sort of thing. So to sort of expand on that a bit further, as I was saying recently, I've been focusing on daily. So yeah, 2 weeks ago probably I was focusing mainly on daily setups as the sort of the clocks that turn have set into motion in terms of ETH BTC, Bitcoin dominance, etc., etc. ETH BTC, 3-day div, right? Running 3-day div here, very, very clean, right? This is the most clean AO structure and clear indicator of momentum shift we've had here, right? This is very significant. Bitcoin dominance, right? Into weekly supply, broken down from this trend line, okay? And yeah, this in conjunction with ETH BTC is everything that I need to see in terms of my sort of macro indicators to start getting more aggressive on the alt front. So as I was saying before, I was focusing on daily setups, right? I'm sorry if this is monotonous to anybody here, but just want to run through this all again. Daily setups, like so. XVS, for instance. Right? Stuff like this. Now focusing on the hourly 4 hour, right? So bringing it down. I'm even starting to dip into the 15-minute, and I may do that more so, particularly for fresh listings. So again, going back to wherever we were, was it ETH? Here. This sort of stuff, right? So you can replace confluence here with time frame as well. Or, even better, you can replace all of this with an umbrella term, validity. Okay? So you need far less validity for your trades when the more trending the market is, the less validity you need, right? So validity means the amount of confluence you need to come together, right? So do you need, a divergence to align with speed, to align with delta, to align with this and that, support and resistance, breakout level, EMAs, whatever you're taking on the technical price action front. Validity can refer to timeframes, right? So the reason trades like XVS are particularly appealing to some people, right? And they used to be very, very appealing to me, is that the validity of these daily setups is incredibly high. And these just don't fail, right? If you get these in the right market conditions, they're, responsible stop placement, sensible take profits. These are some of the highest probability trades that you can take. They're super basic, super simple. They will play. You'll nail them, right? It's as simple as that. But in these conditions, and especially as things start to get crazier, if they do, then we can start getting a bit cheekier, right? We can start going, okay, I don't actually need the highest validity anymore, right? Because let's say, this is a 3-hour setup or whatever. It's a 3-hour setup that's taking a lot of time, right? So time is rinsing and exhausting our it's basically causing opportunity costs, right? Which is not something that we particularly want. We want to be maxing on opportunity, maxing out on value. So as things start to get crazier and as the trend starts to do this, generally speaking, across the board, then we can start diving down into the lower time frames. We can start taking less and less confluence on trades. And that's how we maximize on the conditions, basically, but it's very much a granular, adjusted basis, day by day basis. And we just wake up, we see, is the market strong, is the market weak? Are we getting higher time frame signals such as ETH BTC, Bitcoin dominance? All these factors play a part in, they're woven into a tapestry of larger analysis. And then on that basis, we determine and ascertain how much validity we need in the markets. I hope that makes sense. Are we recording? Hope so. Yeah, 30 minutes in V. So max, you define max long as max risk per trade. You're referring to when I said ETH? Yeah, so max long would be it's just an expression just to say heavy. You should just be heavy on that trade, right? And the reason I wasn't heavy on this trade is because I was focusing on a bunch of other trades. At this time, it was SCR, ENA, ENS, etc., etc. And to be honest, again, my rationale there was that they're beta assets and that they will play heavier to larger degrees, larger multipliers. Yes, I think ETH is going to move from here. This was my very much my instinct here, right? That a lot of people are seeing this as too simple, but this is actually just a golden handout essentially. Do I long ETH or do I long the other assets that I'm looking at, which are looking at upward breakout levels on a horizontal basis, taking out double lows, etc., that I think will run higher. Really, what I should have done in this instance was go really heavy on ETH and take smaller positions on those bets, essentially. But yeah, we live and we learn. I'm trying to fine tune everything as much as possible. Performance has been really good, to be honest. Recently, been very, very happy with my performance. Probably been the best performance I've had in my career over the last few weeks, say. So yeah, been chuffed. It's been really nice to see these improvements. I always said that, you know, from even from the last bear market that we were experiencing, I was, you know, super hyped to trade these conditions with my new skill set, because even me now, from me in the last bull run, is a huge difference in terms of my skill set, my capabilities. So it's been really nice to exercise them. It's been a bit of a playground, but I'm learning on the job as well, guys. Right, so this is my first cycle of like turning up to the table with real weapons, right, to utilize. As a result, I'm also learning on the job, right? So just bear that in mind. You know, if you see me sort of flip flop a bit in my approach and take different stances, it's because I'm trying my very best to optimize things, and there will be change in that endeavor, basically. But yeah, I can run through some of the positions I've been in recently. The last couple of days haven't been the hottest over the last sort of few weeks, I'd say. But I can run through the positions, where I took them, where I'm in from. So ZRC, fresh Bybit listing. You guys will know that I focus on fresh Bybit listings as much as possible. Market makers tend to run it up pretty aggressively, especially in strong runs. So I'm peeking around entry here, right? I'm in from this breakout candle here. So just here. It was a semi-clean horizontal level. Ideally wouldn't have this, but it is what it is, right? 1, 2, 3, pop on the fourth. But yeah, been a pretty piss poor reaction. I thought after this, to be honest, we'd have an absolute runner on our hands, but we've had some strange price action. Come back down. Tapped into the consolidation I marked out before. So yeah, monitoring this position here. As long as we stay above this SR level, probably we'll just hold in. I've sort of jumped in and out of fresh Bybit listings slightly prematurely recently. I think one to note was Supra, which went 70% double days, I think, after I did so. So yeah, trying to avoid that for sure. SPX, again, another awkward and sticky position for me. Underwater. All right, so took this position on the back end of the day that you probably saw me spamming Twitter like a madman in terms of breakout setups. So took it here, and essentially what I did here was abandon one of my rules. Lower validity too much to an extent that wasn't quite applicable for the conditions at hand. And that rule is good consolidation local to the breakout. So really we wanted this consolidation to occur in here. Let's just give this a border. Yeah, we really wanted consolidation to occur prior to the break. Didn't see the consolidation. Yeah, was essentially getting a bit gassed up by the markets. Was hitting breakout trade after breakout trade after breakout trade, and essentially just getting a bit lost in the source. And really, we needed to see some sort of consolidation here. As a result, been slightly punished on this position. But yeah, I mean, I'm showing you guys some of my more negative positions. There's been quite a few, I wouldn't say absolute runners, but really nice profit generators that I've sort of just taken large impulses on breakouts, moved on to the next, recycled. So many of the plays up on Twitter, and a few extras probably as well. Billy, not looking too bad, right, in Billy from yesterday. I don't think it's the sharpest entry. It's all right. So yeah, and Billy from yesterday. I've been stalking this all the way, to be honest, since listing, looking for some sort of reasonable opportunities to get in. Came very close here. Right, came very close here. Didn't pull the trigger. Watched this triangle form here, and was ready and itching. Again, a bit of like gut and intuition here, I suppose, as well. Knowing that it's a fresh buy bit listing. I mean, as you can see, right? So we've got ZRC, XP, and this isn't even me plucking them from a watch list of just fresh buy bit listings. This is me scanning full alts, but then just knowing by looking at the charts, obviously, that it's a fresh buy bit listing. ZRC, SPXs as well, Billy, and I believe, yeah, okay, so I got filled on this overnight. Essentially just into this cluster, whatever you want to call it. It's just one negative candle. So again, a very, very weak example of a demand zone. But yeah, for some reason, looking at this chart, it feels like it's going to run to me. I didn't want to enter up in here. So I was marking out this, I think I put this level out on Twitter on the 15 minutes, so we're starting to go slightly lower now, talking about the 15 minute. Right here. But again, this is slightly forced, right? It's slightly forced, slightly too low a time frame. So again, it's a massive balancing act in terms of the sort of validity and basically the validity you need to enter trades, right? It's a massive balancing act. It's something that takes quite a lot of experience, unfortunately. Can't be taught overnight. Anyway, I didn't want to enter in this area, so I bid this hourly pocket here. Yeah, not looking its hottest, but we'll keep this running for a little bit, see how it goes. Yeah, I'm just gonna pop over to questions with you guys, and then maybe we can do a scan as well and see. Like the thing is, right? So like I'm kind of, I believe, I'll need to do the calculations, but I believe between these five, so yeah, Pepe trade as well. Pepe trade was the sort of anticipatory breakout trade from this candle here. Again, sort of just holding this structure, moving up, and on the 4 hour was the cleanest picture. Just approaching this clean level here, right? Slightly wider than most of the ones that I draw up. You could also do this, right? And then count this wick as the touch point here. But regardless, it was simmering. Doge was looking good. Memes in general were just sticking out on the supers. So yeah, decided to take a sort of anticipatory stance here. But yeah, what I was saying is I believe I'm max open risk across these 5 markets now. For those that don't know what open risk is, it's the total risk, cumulative risk of all your risk positions, basically, right? So if you've got 5% risk on each trade and you've got 3 of them open, that's 15% risk. Up to you guys to determine what your max risk parameters are, your max open risk parameters are. I believe I'm maxed out here. So I'll go through the charts with you guys and scan now. And if I see something which particularly catches my eye, then I'm going to have to make room, right? I'm going to have to make room for that trade. So that means I'll be cutting something maybe like this, or whatever it is. Maybe this trade here, right? Which was a pretty half-assed, whatever you want to call this. I don't even want to use the word demand, but whatever it is, right? So if we see setups that are juicier, that are tastier whilst we're scanning, then fine. We take them, we sub out the risk, we keep our max open risk, we don't start stretching those parameters, because open risk is a super important concept, especially in trending markets. Because if BTC absolutely nukes and this time alts don't hold up, then everything gets stopped out at once, right? And you have to determine your open risk to manage that, right? You have to manage, especially in bull runs, right? When we can get massive wipeouts across the board, you need to focus on open risk to make sure you don't get fucked, basically, and caught with your trousers down. And yeah, if it's something you guys aren't familiar with or don't really practice, please do so, because it will save your bacon a lot. And it's just another way of protecting yourself, right? So yeah, I'll probably do some content on open risk soon as well. Probably not more than a short. I don't think it needs more than a short, but yeah, I don't see people cover it at all. I don't think I've ever heard people really talk about it. They just talk about risk management in the sense of just a single individual position, which isn't right. Okay, so I'm just gonna head over to questions quickly. Billy was 4 and 4 hours. Yeah, it was a nice trade. And also, like, if you choose to, right? If you choose to just TP here, or like even just on this close, right? Then feel free to. I mean, it's a nice impulse. It's a nice trade. Some of the breakout trades that I've been taking recently have sort of been in this manner, right? Get the impulse, cool, recycle it, right? So let's say whatever I make on this trade, I then split into thirds, right? It's or halves, and that gets assigned to 2 more or 3 more breakout trades. And operating in this way, especially whilst I mean, look at this chart, right? This isn't a parabolic chart by any means. Yeah, like this is, we're still playing reversion to a degree. The market's not in full froth mode, right? Like, despite what everyone might tell you, it's not yet. Sure, there have been outliers, right? Some of the dinos, particularly, some of the new coins, some AI, lower cap stuff for sure. But like, generally speaking, we're not in like full froth mode where, I remember the last cycle, it was pretty much just me stuck to the 15-minute time frame, just playing triangles. It was just the whole way through. Just that. Okay, trade it, next. Long it, next. I mean, it just kept going on and on and on, right? It was just the easiest market to trade. I needed very little validity. So it was just one trigger, right? I'm not even going to use the word confluence. There was no confluence. It was one trigger, breakout of the diagonal. Time frame was low. So again, general validity very low, but maximizing on opportunity by understanding that I could keep validity that low. So yeah. Anyway, excited about Billy. Let's see how it plays out. It's a nice reaction today. And obviously, memes are catching a bit at the moment as well. Well played. Been great to follow along and trade with you and the homies. Real talk. Nice one, man. First cycle for me too, where I'm there at the start of the craziness. Nice. Fresh listings, you drop down to the 50-minute time frame and look for a close above resistance. No. So fresh listings, I'm just it can be anything, right? So I'm just like at the moment here, yesterday, I just wanted to flick down to the 15-minute. I wouldn't go any lower than the 15-minute though. I don't think I've ever really operated on I tell a lie. So when we started this group, we were talking about A-star setups. We were talking about heavy confluence for trades. We were talking about having all the stars align. Then we went into Wall of Fame, that whole process. Being as stringent as taking 1 trade a month, right? So we were in that sort of mode. I told you guys that stuff would change drastically in terms of my approach when we hit trending markets. You start to see that in full effect now as well. When we start to get, and this is a lot rarer in instances, but also when we start to get crazy parabolic markets, where shit just starts going absolutely mental, or vice versa. We see those days, where I'm mainly talking about Bitcoin and ETH here, to be honest, not really alts, but see those days where we do just get complete flash crashes and nukes. I do have a scalping system that I use sometimes on the 1 minute, but yeah, generally speaking, apart from that, I wouldn't go lower than the 15 minute. Stick it to the 15 minute at a stretch, right? So again, feel more comfortable, telling you to go on the 15 minute in, once the momentum in the market picks up even more so. At the moment, as you can tell, hourly is my bread and butter, right? So at the moment, we're at that stage where the hourly is my bread and butter. Also 4 hour, really nice as well. This is the only one I really dipped down to the 15 minute on, and as you can see, the only reason I dipped down to the 15 minute was just to sort of chart it up yesterday, but the trade that I've taken has been off an hourly zone, so I'm still not really there yet, right? The market's not yet there yet for me to start going any lower, in my opinion. So yeah, for now it would be stick to the hourly, but when things do pick up, you can start shifting down a bit more, 30 minute, 15 minute, but things have to get a bit more frothy for that to happen. At what point would you just get out the trade as it's doing nothing? That's a very good question, Smokes. That's a very good question. So we can take this, for instance. So again, it would be a matter of shifting risk around for me here. So technically speaking, happy to be in here as long as this holds. Happy to be in. But again, this isn't really the reaction I wanted to see off the back of a breakout trade. So do I care that much? Not really. I'll probably be the first to get the cut, or this. Either or. So yeah, it just comes down to preference, risk, etc. Oftentimes when the trade doesn't go against me, and I feel like we've sort of merged into conditions where it's not really the same trade that I initially took, right? So I'm looking at this and going, this was a breakout trade, right? For the breakout trade, I want to see something like this. Okay, great, we got the first candle there, then we start moving up, then we start consolidating, then we break out, then we do some sort of range up here, and then consolidate under here on the lower time frames and then break out. And I want to see more textbook structure occurring. And the trade that I feel like I've taken now, the one that I did take, is not really where we are anymore, because it's sort of just merged into this other trade. It's just a position I'm holding on to at this point. Where's my validation? What's the point? Very natural questions to feel and ask. So yeah, it's just something that you sort of have to feel out, to be honest. Oftentimes when I mean, a good thing to ask yourself is, when you're thinking about closing that position or leaving it open, is to say to yourself, would I take entry here? So would I take entry here? Does this feel like somewhere I'd want to take entry into? And if the answer is no, then maybe it's a good idea to cut it. The market conditions are super forgiving at the moment. So, recently there's been a couple of times where this sort of thing has happened, or, something worse. Maybe something like SPX, for instance, has happened. But the market's pretty forgiving, so I can, there's been a few times where I've just got out at break even. And that's me being a bit cheeky and just basically playing with the winds at my back and understanding that the context is strong and the trend is strong, and yeah, just basically just roll the dice on it, to be honest. But it's been working. So again, when do you cut the position? A very difficult question to answer. It's a case-by-case basis as well, right? So we'd have to see the chart, understand a bit more about the context of the position, what kind of market is it? Is it a fresh buy bit listing? What's the structure? Et cetera, right? So unfortunately, it is a very subjective thing, a very personal thing, and a case-by-case thing as well. Max, what's your strategy for TPing with initial pump through resistance? I tend to like to secure my position and then leave the rest running. Yeah, so V said it well in the chat. He said, you know, if we do get a sharp impulse, like a 20%, you know, 4-hour candle or whatever he said, then you can just get rid of it. And I went through, I'm not going to do it again, but I went through the Manichae trade, Manichae, or however you pronounce it, that I took a few weeks back, whenever it was, and just showed entry, strong impulse, initial impulse, too strong to not close, closed it off, you know, closed it off, and then didn't have to suffer through this, basically, and it went even lower, it went to under the entry. So again, just keep compounding. If you see a nice spike, a nice impulse, TP, close it off, on to the next. Can you guys hear me? You can? I think that's an issue with your computer, or your headphones. Okay, so currently the best strategy for breakouts is to enter on the hourly candle close without waiting for a retest. Yes, 100%, 100%. Simple as that. Single installment, simple as that. What's an acceptable amount of open risk? That's again very, very subjective, right? Very subjective. So I'll give you mine, but it will probably be wildly different from what you should be doing. So in my trading account, I have, I don't know, 1% of my liquid net worth, right? I don't keep very much on the exchanges ever. That's the function of leverage. So you don't have to hand over your coins to, you know, basically non-custodial solutions. I always want to have the majority of my capital in cold storage. I want to, or my bank, or assets that I own. I don't want to have it sat on an exchange, whether that's spot or perps, right? So that's the first thing. Of that 1%, I try to stick to, I try to stick to 25% max open risk of that 1%. So for me, it's 0.25% of my total liquid net worth. But again, I mean, I think at the moment I'm on 40, if I had to guess. All right, I'm not doing very well with sticking to it. I'm really pushing my boundaries at the moment, being a bit cheeky with things. One of the reasons I have 40 at the moment, or thereabouts, is because we had the nuke the other day on BTC. Alts held up, right? 13% nuke within 4 hours on Bitcoin. Alts really held up. And I feel a bit safer, right? I feel safer operating in these conditions because we've had it clear out very recently, right? So I'm not as apprehensive and fearful of a crash. Also, you know, with the added confidence that alts held up so significantly. It's again a time. What I'm trying to explain here is that open risks shouldn't be fixed. Again, it should fit the context a bit as well. All right, the context of the environment, what's just happened. You know, me talking about there being a recent BTC nuke. It's all taking events into hand that have just occurred. All right, so again, it's a contextual thing. It's a subjective thing, and we have to sort of play it on a, again, case by case basis. Did you use 5-minute divs on sweeps, SFPs, or am I imagining things? In the past, I have. So if you're looking at your, if you're looking at my old school videos in the channel, I imagine there would have been some of those, but not now. Since alts head up in the nuke means the OI is not flushed on them, or there was little anyways. I don't take OI into account. I have done largely in the past. At the moment, simplify things massively. The flow side of things is just liquidations, spot delta, and yeah, just happy keeping it clean. I mean, to be honest, I'm not even looking at that information at the moment. It's just as simple and basic as the charts. All right, it's as simple and basic as an hourly breakout candle. It's as simple as basic as seeing this triangle, playing it on the break. That's it. Right? It's just basic shit. Right? This is baby pips level TA. The execution is as simple as it comes. It's we don't need to look at too much. We're I'm already looking at 300 plus alts a day, multiple times, as I said. It's just patterns. That's all we need. Patterns, strength, keeping it simple, and having the bollocks to hold through, a bit of drawdown as well. That's it. Yeah, it was on YouTube a while back. Yeah, so exactly. That would have been some of the old school stuff. And again, like my trading system is always, like I've said multiple times, it fits to the market. So maybe there's a time where, again, 5-minute divs are applicable. Who knows, right? We need to never superimpose our system onto the market, but just adapt, right? And basically mold our system to the market conditions at hand. Okay, cool. So we're already 45 minutes in and we haven't even looked at any scanning. So why didn't we crack on with that? Yeah, Supra continuing to haunt me as if I can't miss it. Let's go through. Let's just check these positions again. Let's go through and let's do a full alts on the hourly. Anybody game for that? What do you reckon? Give me 1 sec, gents. All right, so from the top. This looks nice. Again, probably going to be as simple as this. Give us no sweep, no nothing. Missed this. Again, why you should be on top of your scanning game at all times. Still got alert here. Just get rid of this for everyone. So I'm just hitting the space bar. For those that aren't aware of how you do it, just simply hitting the space bar on the hourly. I'll do this through the full watch list, and then go through and do it on the 4-hour, and then I might do the hourly again in the evening. Set alert here. It's okay. It's okay. But again, when I talk about the gappiness, this isn't gappy at all. So this is kind of just like one extended touch point for me, which is not ideal. I mean, it probably goes because it's ADA. But yeah, anyway, got to stick to the technicals as well. Algo, been really nice. So I'll just set this alert here, just because when we do see these structures, like what I just went through in the chart earlier, where we do see these, you know, swings, consolidation before continuation. You know, large likelihood is in trading markets we don't get that sweep and takeout, but we still set alerts, right? We still set alerts because for all we know we might get it, like we've been seeing on ETH recently. You know, we could get it, right? So if we do get a nice sweep and takeout, nice bullish green candle close above, green pin bar, whatever it is, then we can take that as well. You know, so it's good to have those alerts to the downside just in case. I'm taking out this low here. So again, an example of that really. Wouldn't be surprised to see this push from here. So you can see most of my alerts to the downside is still just like in place. So again, it just takes a lot of the legwork out, right? A lot of the heavy lifting. When you do stay on top of your scanning, it's just a case of really just refreshing the charts, looking for plays to the upside. I mean alerts and triggers to the upside, and then occasionally updating the ones to the downside as well. And we like these isolated lows as well, right? When we're setting alerts to the downside. Go on, Billy. So great example here of when I got carried away, right? When I got carried away with breakout trades on the day. This was an incredibly profitable day for me, in and out of multiple positions, so much so that I just about kept up with it on the Airtable, but pretty much just like dragging screenshots in and just saying long here, X risk. No rationale, no nothing. I didn't have time for any of that. I was in too many trades. But getting carried away here. So at this point when we break out, 7 o'clock, right? So I've been trading since 8 o'clock in the morning. Multiple positions, rotating in and out of impulses, trying to maximize on value, compounding, etc. Got carried away here, and again, no consolidation. So there's no consolidation. This is just a stretch up, which if you've seen my speed videos, I advocate against very passionately. So again, you know, a case of, and this is another thing, guys, right? So like in the whole like practice kindness, be kind to yourself sort of thing. This is a great example of me messing up, even though I wrote the script. Been practicing those elements of speed, what to look out for, you know, warning signs, etc., for years. And you know, that's, you know, it's pretty much like, I'm sure I've gathered that information of speed from a number of different sources over the years, but most of it's come from screen time, right? So like speed is one of those concepts which is just one of my teachings, right? It's not something like divergences, for instance, or breakouts, which are practices that a lot of people play. Speed is one of my principles, which pretty much just come from my screen time and my experience. Even so, right, even it being one of those things which I've practiced, I've put together, etc., etc., you know, even me, I let you know the ball slip out of my hand here, and just got a bit carried away, right? So again, sharp impulse into the breakout level, not what we want to see. And maybe those conditions change at some point, right? Maybe these just play if the market gets crazy. But for now, we need to keep things simple. And, you know, if you look at my breakout video, there's pretty much one thing you need, right? You don't need to do much mental arithmetic. You're not juggling around a lot of different scenarios, outcomes, triggers, executions. It's just consolidation, right? I had one thing to think about, and I didn't think about it because I got carried away. So yeah, just a note to you guys, that, you know, even myself, I do stupid things like this. This is a very nice chart here on the daily. So again, we can use daily breakouts. So for instance here, not particularly clean, right? But even still, I'm going to use it with the context of the larger high time frame picture in mind. Right, I'll set an alert into this cluster. Okay, because if we can start doing something like this, right, we're taking this trade with responsible stop placement, right, slightly wider than the hourly zone, into the daily picture, right? So if we get the breakout here, then we're talking about this basically just like morphing into a much more higher time frame trade. And then, you know, scenarios like a 30x on a 30R trade, sorry, aren't off the cards. So this is an example of how to use the lower time frames with the higher time frame picture in mind, to hit those crazy home runs. And some of the biggest trades in terms of R that I've taken in the past have been using this sort of system. Whereas obviously if you're just taking a daily break, let's say the breakout candle's here, you know, stop goes here, the same thing, you're taking a 30 down to a, yeah, basically by a factor of 10, a 30 down to a 3, pretty much, right? So yeah, if you can start hawking the charts even more so, looking, you know, scanning for daily setups, but then playing into lower time frame executions, really nice, really nice way of trading these markets. I'm actually just gonna whack this into I don't forget about it. So again, CRV, a nice instance of taking profits, right? So I took profits on this candle close here, I believe, after we had a sort of 3 drive. Again, was really not a fan of this reaction here. You know, you want to see those clean breakout trades just go vertical. Like, what the fuck is this? All right, so at this point, I'm like, okay, cool. I'm not particularly keen on this trade anyway. So took out this. I think I scaled out on this candle here, I believe, or somewhere probably around here. Here. Again here, as we took out the high. And then majority here. This candle. So again, you know, entry from wherever it was down here, just take that value and then get out. Simple as that. I mean, I say that it's not as simple as that, because taking profit in that manner does require a lot of experience. Fair enough. But yeah, just wanted to run through the way that I sort of am in and out of positions a bit as well. This would have been nice here. Took my eye off the ball. Right, this would have been a nice execution here. Again, taking out double lows with the breakout ahead in mind. Yeah, no, what a ripper. Yeah. Okay, so again, taking context into hand, I'm particularly keen to long EOS, right? I believe it will be within that category of dinos that just go a bit mental, right? So knowing that we've seen massive strength in Ripple, Cardano, etc. Happy to stalk this. So I just need to go around and just clean this up a bit. Merlin, we can keep. Comp, get rid of. Billy, we're in. CRV, we're out. Data, okay, keep that. FLM, happy to keep that. Looking for something like this to firm up, right? H-bar, nothing here anymore. Alluvium, don't even know what I was looking at here, to be honest. Mask, no. Breakout level here, poor reaction. Again, try and keep it gappier than this, otherwise it gets a bit messy, right? It's a grey area, and you can see by the play out. Tier, not in this position anymore either. So yeah, we can get rid of Tier. There's nothing really here anymore on Tier. Blur, same thing we covered earlier about the consolidation, right? Grass is a 4 hour trade. Just seeing if there's any way we can snipe an early tight entry on grass. Not really. We'll keep that in there. This is out now. Avia. Out. Pepe. In. Okay, so where were we? It was... let's get rid of these supers. I completely lost the chart. Does anybody remember the chart I was looking at? We got to data for sure. We were at ENA plus, weren't we? Do you guys remember the chart we left off on? Anybody? Oh yeah, EOS, that's right. So we'll whack EOS in. So I'll just have one for scanning and then one for whacking bits in. What we really want to see, by the way, when we're looking at these isolated lows, is for the rest of the market to be doing what it's doing, right? So we don't get like a correction anywhere. This isn't a time where the market's dipping, but this asset just on its own decides to do this, right? That's why we have these alerts set up. Yes, they will all go off simultaneously and it will sound like an absolute madhouse in your house if you have a loudspeaker for alerts. Which my wife is obviously not particularly fond on. But yeah, you may just get an isolated alert go off, right? This just decides to dip down on its own, grab the liquidity and then run. And that's particularly why we set these isolated alerts. Just about, right? Just about happy with this. Set an alert here, 2 hour demand. Right, so as I've said before, if you're scanning the hourly, you should be able to see things, you should really be able to see things up to the 4 hour, down to the, I'd say 15-minute sort of thing. So you can sort of see the time frames around, or you can, yeah, you can guess anyway. 2 hour demand. Just, but yeah, plausible. So again, I'll add this in position because I want to keep a keen eye on this. Maybe shift some positions around after stream. Maybe some bids, maybe not. Someone asked about loose in here. What do you think about the breakout on loose? I wanted to enter, but since the 1 hour candle was really tall, I thought it would have pulled back. Instead, it continued to go higher. Oh, here? yeah, it's just it's just one of those cases where it's just unfortunate, right? Stuff just goes a bit too high for you to be positioned into. Essentially, you just took the wrong candle. You just waited a bit too late. This would have been the trade here. Again, one that slipped away from me as well, my friend. So it is what it is. Even though I was stalking this market as well. Or so I thought. C'est la vie. God, this would be nice. Imagine how many lows we have left untapped. Yeah. So Merlin could be a deviation here. Could be a deviation. But again, not really looking for deviations, plays to the downside as much because I'm looking to focus on strength. But again, actually, to take that back, Merlin is playing into an upward level here. So I will actually put this into setups. Oh, we've already got it there. It's already there. So you can see, guys, it's not the sexiest exercise, right? But we have to just keep scanning through multiple times a day. If we're taking hourly and lower, anyway, just because there's so much opportunity around that, you know, what's another half an hour to an hour of your day? And you should think about scanning as where the money's made, right? So if scanning is something that feels very laborious to you and something that you just put on the back burner, then just tell yourself that you're not going to make that money. You're not going to have that gain on your equity curve unless you do the scanning. Scanning could generate 4 to 5 setups that play, right? And if they play nicely, that could have a huge impact on your P&L. So just see it as, you know, you're making money every time you scan, essentially. This is all right. So OGN alert on the trend line itself. Very clean chart, very clean structure. What is this? Pepe? Yeah. And don't rush scanning, right? So just flick through at your own comfortable pace. Right, if you feel like I'm going a bit fast for your eye, you don't have to do it at this pace at all. Right, just do it at whatever you feel comfortable, even if that's 10, 15, 20 seconds, 30 seconds a chart, more, it doesn't matter. You'll naturally get faster and faster and just feel your finger going a bit faster as you do it more and more, basically. It becomes like muscle memory. This is very interesting. Look at line, yeah. Yeah, we'll keep an eye. Fucking hell. There she be. Look at this, eh? The trade I wish I was in. The trade I wish I was in. Oh well. On to the next. And I want to have a note to you guys as well about the whole like on to the next thing. Like if shit runs without you, like let's please not get emotional about it. It happens, right? I want to keep chatting in the group to positivity only. Let's not, get really emotional about positions running away from you. There's so much opportunity here, right? There's so much opportunity in the markets. Just move on. Just move on. Tomorrow's another day. Scan for new setups. Right? Simple as that. Uni. Looking very good. Right, we're into the V's and the W's, so coming close to the end of the scan. YFI would have been 4-hour zone, perhaps? Yeah. Yep, this looks good. Taking out the low, diagonal above, 3 touch points. YGG. So again, we just pluck out, a handful per scan. That's all you need. That's all you need. Head cash. Another dino. That looks nice. That looks very nice. Okay, that's it. Now we're looping. We're back into the thousands. Yeah, okay, so I'll just round up with your questions and then we'll probably close up here. Risk limit discussion is a great one because too many good setups appearing while scanning. 100%, yeah. If there's one takeaway from this or 2 takeaways from this this stream, again, it's, the validity, right? So the aphorism on validity and that piece we covered at the beginning, 100% is something that all traders should embody. If that's not part of your system, I couldn't advocate anything more, to be honest. And then again, whilst administering risk, be very cognizant of open risk, right? Otherwise, you can nuke accounts overnight. You wake up, market's nuked, and you're completely fucked, basically, for lack of a better term. All right, guys. Any questions? Any more questions for today? If not, I'm gonna hop off and start managing positions a bit. All right. Enjoy your Sunday, guys. Lovely to catch you as always. And yeah, see you guys in the lounge.